Welcome to Shaf Man TV. Today I'm going to look at a company listed upon the AIM stock market in the UK called Eve Sleep. The ticker is EVE. They originally started as a bed-in-the-box brand and they've now become a sleep wellness brand. They've got quite an interesting past actually. Woodford Patient Capital owned a large chunk of this company, and when the Woodford funds became illiquid, companies like Eve Sleep suffered hugely, with their share price reducing from over £1 a share, I think it was £1.40, down to under 1 pence per share. So quite a drop. And the obvious reason for that was that historically, the last sort of 3 or 4 years ago, Eve were losing sort of 20 to 30 million pounds per year, and the company was being propped up by the capital provided by Woodford. When Woodford went bump, there was really an existential, a question of whether this company could still exist. And you've seen in the past 3 years, 3 years ago it made a £20 million loss approximately. 2 years ago it made a over £10 million loss. And last year it made only a £2 million loss. So the losses are narrowing, and the company's done pretty well to stabilize itself. Like I said, there's really been two key players in that process of restructuring. You've had James Sturrock, who came from Moonpig, and then you've got the current CEO, Cheryl Cleverly, who moved from sort of the chief marketing officer across to CEO around just over a year ago. And the restructuring involved leaving every market apart from the UK, Ireland and France, reducing the cost base, reducing marketing spend considerably, moving offices, and just generally cost cutting. And it looks like they've done a pretty good job in the first phase of restructuring the company. They've, as I say, ensured that the losses are now down to around £2 million. But now the next question is, can the company actually consistently make a profit? Can they organically grow? Can they grow the customer base? And can they use free cash flow from the business to actually expand the product range and expand the customer base? So these questions are yet to be answered, and they're really the central risks to currently investing in Eve Sleep. Just to be clear, I'm not offering investment advice here. You should seek independent investment advice from professionals, and also, just to be clear, I have a large holding in this company. So the next 12 to 18 months are going to be really vital to see whether the company can actually enter an inflection point and actually make profit. The management have said that they think they will be making profit by the end of 2022. We've got a trading update on the 12th of September 2021 to see where the actual company is in terms of its net cash position. The share price since the half-year results has been really bad actually. I think this is due to the fact that net cash has reduced by £3.2 million in that 6-month period from January to June. You've got you had £8.4 million net cash at the end of December 2020. By June 2021, net cash was down to £5.2 million. Crudely speaking, you can probably account for that £3 million reduction for three things. Around £1 million of inventory has been purchased. Around £1 million was spent on an ad campaign in France, which should be launched in about May, which is the La Vie en Journée advertisement campaign. Sorry for the butchering of the French language. And the final £1 million would probably be the underlying loss in that 6-month period. So it looks like the company's losing about £200,000 a month on an ongoing basis. So interestingly, sales in the UK in the first half of the year were up 18%. The overall revenue is up 13%, up from £12.2 million in 2020 to £13.9 million in the first half of 2021. So obviously there is growth in the revenue. The company now look like they're only pursuing, quote, profitable sales and not sales at any cost. And obviously the big hope is that the investment that's being made into France will bear fruit in the second half of 2021 straight into 2022, where the company can make an ongoing profit. From my figures, and again, I'm not in the know at all, I think that the company has to make around sort of £28 million to break even. And I think that assuming the cost base doesn't move too much and the company can be operationally geared and they can leverage their increased awareness of the brand, I think you need a turnover of around £35 million to actually make some type of decent profit. On the positive side, there's only 270 million shares in issue. So every £2.7 million of free cash flow profit, could translate into 1 pence of earnings per share. And if you could somehow you could get 10, 15, 20 million pounds of free cash flow, you could see the company's share price move from the 3 to 4 pence zone really quickly into, the high teens, or maybe even the 20s or the 30 pence zone. So the company look like they are doing quite a lot of the right things. One thing I will say is that it's much easier to cut your costs than it is to actually grow sales. So the growth of sales is happening, and the question is, can they continue to grow sales? I mean, 18% in the UK in the first half is pretty good. Can they continue on a compound basis to grow those sales and for those sales to translate into free cash flow? If they can, the share price should respond accordingly. If they can't and the net cash decreases, then obviously there's still a chance that the company will have to raise more capital, probably at a discount, which would damage the share price, or somehow get a line of credit. So yeah, we've got the results coming out on the 22nd of September. I'll probably make a video when they come out. So this has just been an overview. Do your own research in relation to investments, but I hope that's been useful to give you a quick summary of where the company are at. But there's a lot more details to look at, so please comment below on your views on Eve Sleep, and I appreciate you watching the video. Thank you.